All right. Hey everyone, Mark here. Thanks for joining me for another Greenbridge Investing market analysis. Hi HS, good to see you. DJ, okay, no problem. Mario, nice to see you, Mario. Thanks for joining us. So welcome again. In this session, I'm going to cover the Bitcoin situation. I'm going to talk about a couple of scenarios that are within reason to anticipate, both bullish and bearish. Then I want to talk about the stock market, and I want to talk about the major indices like the Nasdaq and stuff, the UVXY situation, because in the chat room there's one perspective, but what I'm talking about is a different perspective. So I want to make sure that that's clear. And then of course we're going to cover the stocks and the markets that you would like to see. So if you're new to Greenbridge, please, if you don't know how this works, please share the symbol or the market that you would like to see in the chat right now. If it's a coin or an altcoin, just make sure you put USD or USDT after the symbol so I don't go looking for the wrong one. And we'll spend some time on that. So I want to be brief on mine, and I'd like to spend more time on yours. Okay, so with that, let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, we're going to begin with Bitcoin. But actually, before I begin, I just want to say one thing real quick. If you're new to Greenbridge Investing, first thing, if you like the video that I'm doing here, please press the like button because it lets me know that you like what I'm doing. If you have some suggestions, please let me know because I'd like to improve your experience as much as possible. Also, make sure you register for the YouTube channel here. Every time I do one of these videos or when we do our Talking Market show, you will get a email notification from YouTube. And on top of all that, real quick, let me show you this, okay? If you're not familiar with our service and what we do, at Greenbridge, we offer swing trade signals by text, by email, portfolio management ideas by text, by email, and chat rooms, right? We have a free chat room. We have a paid chat room. We also have Dave's aggressive stocks room. Now, you could see this for 6 months, we're looking for $299, or it costs $299 over a 6-month period, which comes to $50 per month. For the yearly plan, it's $399, or basically $33.25 per month. We have a free plan, which allows you to get the trade of the week. And we also, like I said, we have a free chat room. The reason why we no longer do month to month is because in order to benefit from our strategies, which are they're longer term oriented compared to what people are usually used to, like day trades. We have swing trades, we have position trades. They take time to play out. We have some trades that take a couple of months. That's a swing trade for them to reach a third target. I mean, take a look at Sunrun, reached its third target yesterday. We were in that trade like 2 months. So in order to really benefit from our strategy, you need to make the commitment like we do and stick it out every day, get the emails, get the notifications, and follow the perspective that we provide. Okay, so I just want to throw that in there real quick. Enough of that. Let's get into analysis here, and let me take this off the screen. All right, so again, if you have any questions, please share in the chat here, or if you'd like to email us, you can email info@greenbridgeinvesting.com. All right. By the way, we do have a 7-day free trial, so you can check us out for 7 days, see how you like it, and go from there. All right. Anyway, enough of that. Let's get into analysis here before I start ranting. All right. So let's talk about Bitcoin first. And again, share your question in the chat, and I will be going through the chat here momentarily. So first, let's talk about the chart. Now, if you notice on the chart, on my chart here, I have particular lines at particular levels. Those are what I call inflection points, and they are projections, okay? So if you notice, every time price reaches one of them, there's some type of reaction. Now, that reaction is not predictable, but there is a reaction. So that's why they serve as reference points. Some people make the mistake and they'll say, oh, this is a resistance, so I'm looking for selling activity and I'm going to go short. Okay, it's okay to anticipate selling, but you can't think in absolutes. That's a common mistake that people make. You have to basically look at as an inflection point, as a potential place where resistance can occur or selling activity. And as you know, we don't short Bitcoin. So we have not placed one short or talked about shorts since this thing has been at 6,000 or even 3,000 because we don't short it, right? We short other markets, but not Bitcoin. You can see why now. Anyway, but let's talk about the levels now, and let's talk about some scenarios that are within reason. If you look at today's candle, let's begin with today's candle. That is a doji, a wide range doji candle. Okay, those are, let me just get this off the screen, that box. Okay, these type of candles are indecision candles, right? Which means that the market may be running out of momentum here. It's not exactly a bearish, it's not a bearish reversal type of candle, although it could lead to a retrace, right? It can also lead to a consolidation where we may get a signal to go long. So at this point, what is best to do? Now here's what you have to keep in mind, and this is what you need to consider whenever you're taking a trade or you're about to take a trade. You need to understand the magnitude or the time frame of the trade. When I talk about this chart, and I talk about most of my ideas that I talk about are swing trade ideas. Swing trade means it's very short-term oriented, may be good for a couple of days, maybe a couple of weeks, okay? If I talk about inventory or position trades, now you're talking about months to maybe a year, right? That's the magnitude or the time frame, the time horizon of the trade. I'm never talking about day trades. So you need to understand that first, because that's going to determine or shape your expectations in terms of reward and risk. Now, as a swing trade, I've been talking about this over and over. I write about it on TradingView and anywhere else that I put analysis. These levels, okay, from 32.5 to 40.5, these are high risk levels for longs. Now, after the fact, you may say, well, high risk, this thing just keeps going straight up. So where's the risk? Well, here's what you need to consider. You look at this retrace back here, okay? This was like a beginning of the week. We saw that retrace, that bullish pin bar type candle. That candle was 7,000 points. So as a swing trader, that is way too much risk for me. I'm not taking a trade, you know, at a level and hope that I can make maybe 1,000 or 2 points as this thing continues higher, but I have to risk 7,000. You will never make money that way. Okay, you may make money a couple of times here and there, and people that are making money in this, people that have no sense of time horizon, and they're just putting on a trade because all trades seem to be the same and they're making money. What Bitcoin is doing, and many other markets too, like the S&P, they're reinforcing ineffective behaviors. So over time, when they keep trying this, they're going to lose a lot more than they make, and they're not going to make it back. Okay, but right now, these gambling behaviors are being reinforced. That is what is going on here. So, like I put in a chat room earlier, I follow rules. The rules help to minimize me and people that follow the rules from succumbing to human emotion or human nature, which is what will mislead you or misguide you in these situations. Some people are impatient and they'll say, oh, it went up 10,000 points. How come you're not taking any trades? Because the rules say no trades, okay? Because the risk is too high. And I follow the rules. The rules are what make money over time, not the market, not your feelings, not your opinions, not the news. It's the rules. And that's how it works for swing trades, okay? We have a very consistent swing trade strategy, so I trade the rules. Now, so again, scenarios. If this wide range doji, if it sticks, meaning it closes this way, then the thing to watch for here is going to be the low, which is 36, basically 36.5. Okay, you don't have to use exact numbers here because these things don't trade in exact numbers. You have to round it. So 36,500 area. If that's taken out, you're looking at a possible pullback. Now, if this leg that we've had since December, okay, it started sort of like a second week of December. We have this entire rally here. If this is wave 5 of a broad wave 3, which it's very likely because wave 5s typically look like this, especially when they are a wave 5 of a wave 3. They become ridiculous. I'm talking Elliott Wave terms here. If you're not familiar with Elliott Wave, don't worry about it. But my point is this. They often look ridiculous like this, and they look like they're never going to turn around. When they complete, now the next wave that follows is a wave 4. I'm going to show you a nice example of a wave 4 here in a moment, but wave 4s are very unpleasant, and they're very hard to trade. So all these people that are day trading this thing right now and they think that this is how it's always going to be, they're going to find out very soon that it's not always like this, right? So there are certain periods when these things like Bitcoin and the altcoins, there's certain periods where there's a lot of volume flowing in, right? And when there's a lot of volume flowing in because, it's making new highs and everyone's excited, you'll have day trade opportunities because there's enough volume. When this thing goes into a wave 4 and consolidates and basically pushes all that money out, right? Because they'll be very hard. Trying to day trade these things is going to be extremely difficult, especially when you have the costs working against you. That's why, you have people that, the only instrument that I know of that's consistent for day trades are stocks, right? That's why you have so many stock websites out there that sell day trade education and other stuff, because it's been that way for, at least the 20 years that I've been in this, it's been the same, right? Can't say the same about Bitcoin. Now, so here's the thing. If this thing pulls back, it's likely the beginning of a wave 4. Okay, wave 4 is typically a consolidation type of wave, and it doesn't go on for just a couple of days. A wave 4 can go on for, especially at this magnitude, it can go on for weeks. It's possible. Now, we saw wave 2 on Bitcoin. We saw wave 2, the broad wave 2, lingered for 2 years and found its bottom the March of 2020. That was a wave 2. 2 years. I don't know how many of you were active in that or trying to trade through that, but we were. We were calling swing trades. Not all of them worked out. We had a couple of wins during that time, but it was very hard. No one was interested in Bitcoin at that time, and all that other stuff and all these altcoins and everything else, because everything was going to zero pretty much, right? So a wave 4 is a similar type of situation. It's a consolidation type of wave, and it could go on a couple of weeks. It can go on a couple of months if we get a very broad wave 4. How will we know if it's broad? Well, the initial wave will probably be steep. Okay, it'll probably be steep. So, right now, even if we get that initial wave, we're open to taking a swing trade on the first pullback, but the pullback needs to go to a support that makes sense. Right now, that support is 32.5 or 32,500. That's the first area where I'm open to a swing trade. There's at least a high probability area there that you're likely to get a bounce. Will that bounce make a new high? Don't know. Okay, it will probably try, and that's all we need it to do because we can manage it from there, whether it makes a new high or not. But that's the high probability area based on price structure. If 32.5 is cleared, then we're looking at 27.5. Those are the levels, okay? Now, going further than that, if this thing starts pushing into the mid-20s, I think that's a low probability at this point, although it is possible. I'm only looking for that initial pullback and the initial pop, which if we get the right signal, we'll be willing to take it, okay? Because again, wave 4, there's no guarantee that we will be in a wave 4 if it has that pullback and pops off. It may have one more leg higher before wave 4 begins. That's the subjectivity of Elliott Wave, and it can be very frustrating for a lot of people because you have to constantly adjust. There's no absolutes, okay? Only after the fact can we say, oh, wave 3 is in place, because it's all after the fact. That's an important consideration. Also, whether it's Elliott Wave, whether it's support and resistance levels, or whether you're trying to evaluate an oscillator, you still have to have that open mind and be willing to adjust. It's not easy to do, okay? But you have to look at a number of factors and basically put a context, or put puzzle pieces together that give you a context of the situation. So like I said, we're willing to take that chance, at that 32.5 area. Of course, there has to be a setup and there has to be confirmation. We need to be able to measure our risk effectively. Otherwise, no trade. Now, the other scenario is it's possible that Bitcoin doesn't pull back that far, okay? Bitcoin may find support sooner than that, may find support in the mid-30s. Okay, we'll be open to it, and we'll see what the market provides. But until that occurs, I can't say anything about it because there's no structure there, okay? Now, can Bitcoin just continue higher from where it is? Is there any guarantee that it's going to turn here? No, there's no guarantee. It can continue higher. But the higher it goes, the higher that risk of free trace. And as you saw, now look at this candle. I just want to say one more thing before I go too long on this, because I have a tendency to rant and over talk. This doji, look at the range of the doji, right? The high is 42,000, which is the all-time high. The low is 36.6, right, which I just talked about. That's what, a 6,000 point range on the candle. That's a normal movement for this thing. 6,000 points, right? That's just within the range of its movement, which means if there's a serious pullback, it can go beyond that, right? So as the higher this thing goes, that first pullback, that dramatic pullback, which can come out of nowhere, can get very ugly. So if you're the type of trader that you don't have a lot of experience yet, you're still trying to figure this out, and you get caught in like a day trade, meaning you took a trade on a 30-minute chart, and you're like, oh, but it'll come back. It always comes back. There's that one time where you're going to get caught in that really steep pullback, and it'll be like 10,000 points, and you won't believe that it's just pulled back 10,000 points because it hasn't done it in 2 months. Okay, it's tried 7,000, but it doesn't mean it can't do 10,000 when 6,000 points is a normal movement for this thing. That's the risk you're facing. Okay, as a day trader, you have to have tight stops and you have to know where to place them. I'm not going to get into all that because it's very complex and all that stuff. I put some stuff in the chat room about it, but I don't encourage day trading this thing. Again, if you make the mistake and you buy it and now you're exposing yourself to that much risk, only to try to make a couple 100 points to maybe 1,000 points, maybe, it just doesn't make sense. All right, so that's the Bitcoin scenario. It may inch higher. I don't have another resistance on this thing right now because I have to do the analysis. I haven't done it yet. But I can tell you this, without doing any analysis, I can tell you 50K is going to be an inflection point because most of whole numbers are. Okay, so there may be a number somewhere here in the 40s, but I have to do some analysis on the chart to figure that out. Okay, anyway, so that's where we are with Bitcoin. Let me know if you have any questions. Now, someone in our chat room earlier, one of our new members, asked about Litecoin. So since I'm on these, let's talk about Litecoin real quick. Litecoin, again, is not a leader. Litecoin is still a follower, okay? And it's followed very well. It's done its job, okay? We were talking about a lot of altcoins, over the previous month or two, and people have asked me things like about XRP and OMG and some of these other garbage coins, and I've been warning against them because they don't follow. And they should, when Bitcoin is pushing dramatic new highs, when Bitcoin was pushing 20K, 25K, 30K, 35K, when it's doing something like that, your altcoin is not, that is a huge red flag, okay? Now, Litecoin and Ethereum and a few other coins, they have been doing their job. Litecoin has been breaking out, right? Breaking resistance levels and making higher highs. Perfect, that's what you want to see. So now, assuming, again, Bitcoin is the leader, which right now it still is, if Bitcoin pulls back, this is pulling back too. Look at the indecisive wide range doji that we have today on Litecoin. Same thing as Bitcoin. So in this situation, again, use Bitcoin as your guide. If these lows are taken out, okay, with Litecoin, I can tell you the level on Litecoin is going to be around here somewhere, right? What is that, 144? So you figure lower 140s. If the lower 140s, if that number is cleared, then Litecoin's probably going to be in a sharper pullback mode, but I would expect Bitcoin to be pulling back dramatically as well. If Litecoin tests that low and just fools around there, and Bitcoin is not doing anything dramatic, like it's pulled back a little bit, but it's not breaking any serious levels, then it's likely to bounce there, okay? So as long as Bitcoin is staying strong and not breaking any significant supports, I expect Litecoin to behave in a similar way, right? So I wouldn't be buying Litecoin at these levels. If anything, if I had Litecoin, I would be distributing, or I'd be, taking profits, locking portions in. If you're an investor and you have inventory, what do? You unload some inventory, right? Whether it's 10%, 15% of your position, don't worry. You're not going to get the absolute high. What you want to do is get in the habit of averaging out near highs and averaging in near lows, right? This is definitely not a low. So there are a lot of speculative traders out there, frothy, reactive traders. They'll buy anything. This is a time to sell to them because they want to buy it. So you distribute your risk, right? You unload your risk onto them. That is what professionals do. That is what institutions do. So you unload some, and then you hold on to a core position if you're an investor. Swing trade, it's a different story. It's just like Bitcoin. We don't really call too many swing trades in something like Litecoin. This is more of like, since it follows Bitcoin, we're just going to trade Bitcoin. But like I said, this is a place to unload some. If it pulls back, you'll have an opportunity to buy those coins back at a lower price and get a better average price over time. Okay, if it doesn't pull back, hey, you've locked in some profit and you're still going to continue this trend until at some point it finds a peak. So those are the levels that I'd look for on Litecoin. Again, Bitcoin, of course, needs to go higher, and I would expect this high on Litecoin 181 to be taken out. Okay, now if we look further back, if you want to see some compelling levels, and you go way back in time, back to when Litecoin was like back in the day, 2018, when everyone thought Litecoin was going to be going to like 10,000 and all that other stuff, we can see some levels back here. Look at this. So this is from January of 2018. Look at that. Look at that peak right there. Okay, see that? So there is resistance there, and I'm not surprised to see that pin bar. I'm sorry, the doji. If that level is cleared, the next resistance is around 210. Okay, around that 210 level. And you can see that just based on this price action way back here. So those are some levels to consider. Again, if you're in it, those are places to reduce risk, not put on more. I can't stress that enough. If you're an investor, the places to put on risk are at lows, where people are banging it out, where reactive traders who don't know what they're doing are getting margined out of their positions. That is the opportunity to buy, not at these levels. Okay, so I hope that clears up your question about Litecoin. All right, Adnan. Okay, so let me see what else I got here. I wanted to mention another coin. I want to talk about NEO, right? Because we're seeing a lot of this, right? Now look at NEO. So there are coins that are just popping out of nowhere, and they look spectacular, right? So we'll get a lot of questions. Hey, should I buy NEO? Hey, is NEO a good trade? Blah, blah, blah. Now, again, as an investment, most of these coins are a bad idea, okay? Because they don't really have anything to offer. This is just speculative froth. So if you're in it for like a quick trade, like a swing trade or whatever, a day trade, you want to try to grab some money out of it, okay, fine. But I wouldn't touch these, right? These are pretty much like lottery tickets, these moves, okay? A move like this. So charts aren't going to be that helpful. They may be helpful for temporary periods of time because there's volume flowing into them, but there's no broad bullish structure here, not really. Okay, this is just range bound, and it's, there's really nothing special about this. Look, some of these other ones, right? People have this idea that some of these coins that have so far not really participated are gonna just out of nowhere try to catch up, right? And I can understand why people are thinking that. If you go onto YouTube, there are videos out there like, oh, first it's going to be Bitcoin, and then it's going to spread to these coins, and then it's going to go to the little altcoin. I would not be following anything from those videos. Most of those people they don't even have 5 years of trading experience, let alone what goes on in these things, right? They may sound smart. They may know what's going on from a programming point of view, if you want to call it that, or a tech point of view. But when it comes to markets and irrational human behavior, I would not be going by that. So you don't want to chase after these things. These are all like penny stocks. Okay, if you want something to compare to, compare them to penny stocks. If you know anything about penny stocks, they are basically gambles. They're penny stocks, or they trade as pink sheets because they don't have to report particular financial information to regulatory organizations, and they can pretty much do whatever they want. So basically, by investing in one or whatever, you're taking a big risk. Now, when there's some particular news that drives one, hey, you got a lottery ticket. But most of them will not really perform very well. They're not investment type. They're not very good for investment. You want to invest in stuff, there's so many stocks out there that offer so much better opportunity and pay you to hold on to the shares, okay? Really should consider, if you're looking to invest, altcoins are really not the way to go. If you want to gamble and throw $100 in here, $100 in there, and then $100 turns into $1,000, great, that's your home run. But you're not going to make $50,000 like you may hear some people do, off of a gamble without losing a ton of money in the process, okay? Like, for example, I'm going to bring one up that we did that with, right? Theta. This was brought up in our chat room a long time ago. Alice was a big investor in this, and we threw $100, okay, $100 into this thing. I forget at what price exactly. The $100 became worth $1,500, and that was it. We got out. Okay. I think we may be holding on to some. I don't even know. Andrew handles that. I don't even know. But that was a gamble because there was nothing on the chart that said it was going to do this. Okay, nothing. It was just consolidating, blah blah blah. And if you had, like I brought this up before, if you had asked me at the time, hey, should we buy Theta? And I saw this, I'd be like, it's a garbage coin. There's really no reason to buy this. I mean, that's what I would have said. And here you go. So there's a chart is not going to be very useful trying to catch one of these type of moves. You just have to gamble. And either that or you're an insider and you know what's going on before everyone else. Okay, so that's the story there. Now, all right, so that's pretty much the altcoins I wanted to show. Let me see how I'm doing with time before I overdo it here. All right, yeah, so if you have any other questions, let me know. And just, if there's an altcoin you want to see, just put it in the chat and I'll get to it as I go through the chat. So let me just go through the chat here. So DJ, he couldn't attend the session, but he wanted to take a look at Beyond Meat. So let's take a look. Actually, no, you know what? Hold on. Before I get to that chat, I'm sorry. I got to talk about the stock market, and then we'll get into that. And I also want to show you gold because there's some important educational examples there. Let me get to the stock market first, okay? With the SPX. So this is the S&P 500 CFD. I use this in place of the SPY or the S&P futures because it's the same thing, and it's a nice, clean, orderly chart. Now, we took out this 3780 area. It was a pretty important area. We took it out, okay? And as you can see, today we're at 3816. That's pretty significant, right? That's a pretty significant breakout. But here's the point that I want to make about stuff like this. Yes, these are all-time highs. If you turn on mainstream news outlets, you're going to see all this, celebration and exaggeration and blah, blah, blah. They, all they're doing is reacting to what's obvious. It's not going to help you as far as timing goes, especially for the short term. So as a swing trader, I'm a contrarian for one. That doesn't mean I take the opposite side. It just means that I'm always looking for the opposite. I'm always putting more probability on the opposite scenario, all right, that is likely to happen. So like something's in a strong trend, right? This is in a strong trend, clearly bullish. It's a higher high. So I don't really want to get in its way. But there comes a point where it's likely to turn. And if I'm willing to gamble, right? I am willing to gamble on something like the S&P or the Nasdaq because I'm very familiar with these markets. And as you can see, there are periods when out of nowhere, and of course there'll be a news catalyst behind it, but we can't see that news in advance. There's no way you're going to see that from a chart. But as you can see, there are these pullbacks, right? So trying to play one of these pullbacks can be very, very difficult to do when you're trying to work on the short term. And the only way to really do it, right, is you have to try to short it at a high. So in these situations, what do? How do you protect yourself? Well, this is where I keep bringing up the UVXY. Now let me show you the UVXY. That's the ProShares Ultra VIX short. Basically, this thing does the opposite of the S&P. The VIX is a sentiment index that measures how many puts are being bought, or basically it's a reflection of how many puts are being bought. Puts are a reflection of fear. Okay, so if lots and lots of people are buying puts, then the index will go higher. The premiums of the puts will be higher relative to the calls. And that means that people are anticipating a bearish market. Usually you see stuff like that when a large pullback is occurring, okay, when it's obvious to everyone. The trick in this game is to get involved or take a position when it's not obvious. And I think the Nasdaq and S&P are in such a place right now. Yes, they're pushing highs, but let's take a look at this is the UVXY, like I said, where I'm interested in buying calls. Now, if you don't know about options, then just disregard what I'm saying right now. But a call option looks to take advantage of a push higher in this thing. Now, in the chat room, I talked about UVXY, and Andrew mentioned this thing about backwardization and contango and blah, blah, blah. Right, that's all good if you're trying to play a trend. But as a contrarian, and in this case, as someone that's looking to play a gamble, a very low probability situation that could pay off in a very high way, I'm not involved in the trend. I'm not interested in a trend. I'm interested in counter trend. Okay, and the UVXY can spike if the VIX spikes. Now, what will cause a spike in the VIX? A sharp move in the S&P. So that S&P sharp move can occur in a couple of days. It could be a couple of weeks. But what we don't know is the magnitude of the spike. Now, if you look back here, going back, back 6 months, right? As you could see, well, back in May, you know what this was, right? That was the March low and all that stuff. You saw the UVXY went from, what, 14 to 66 in just a matter of 2 weeks. Now, that is unusual and very rare. We don't know the magnitude of the spike. But as you can see, since then, right, there have been other spikes. You see these spikes? Now, these spikes are not trend reversing, right? This trend is still bearish. But as you can see, there are spikes. So as a player of the UVXY, I'm only interested in a spike. That is it. So I looked at the call options today for the March UVXY. And I was looking at about $2 per call, $15 strike price. So if there's another spike and you get a below average spike, you're probably looking at maybe a UVXY of around $20, something like that, based on these historical movements. As you can see, these are low magnitude spikes that we saw since October, right? How high was it here? $23. Okay, so if I buy those $15 calls and we get a spike to $20, my calls are probably going to double. If I'm paying $2 for the call and I could sell those calls for $4, I'm happy. This is not a trend trade. This is not an investment, okay? This is a gamble, and I'm gambling on a spike. Now, I haven't taken a position yet. I haven't sent anything out on yet, but I want to present the idea. So we don't know the magnitude, like I said. If there's a sharp pullback on the S&P and that pullback happens quickly, this thing can easily go to $30, okay? Now, the other side of that is if there's no movement, then the time value decay is very steep on this, as you can see, and the trend is not bullish. So if you pay $2 and the S&P just grinds higher, that $2 will be worth probably $1 in about 2 weeks. So are you risking the advantage is if you're wrong and completely wrong and this thing, the S&P doesn't pull back, well, you're going to be out the $2, right? That's your maximum risk, which is okay. If you're okay with that, you're okay. You also have the choice of getting out early. You put in the $200. Now it's only worth $100. You don't like the way it's going. You get out. You lose your $100. Okay, and you take back $100. Whatever. That's up to you. If you're right and you get the spike sometime between now and March, those $2 are worth double or triple. Again, it's not something you hold on to. It's once you get that double or triple, you get out because this is a spike, right? Spikes, as you can see, they don't go on for very long. Right? Even these ones back here, they're only good for a day or two. Now you had this, like I said, unusual one, but that was driven by that very unusual news. So that's what I'm looking at with the VIX. By the time it's obvious, the party's over. Okay, so that's the idea. And if I take the position, which maybe I'm considering it maybe for Monday, hopefully the market is a little higher because to take the position, I want the market to be going higher. I don't want to take the position when the market is pushing lower, because that means I'm going to have to pay more for the call options, okay? So I just wanted to mention that real quick. I just wanted to present the idea. All right, now, so that's the stock market. That's the S&P. Now, let me just show you real quick the Nasdaq, because look at the Nasdaq, right? Super strong. Same situation. The thing is on its highs. Pushed 13K. It's up 142 points today. I suspect that Bitcoin may be linked to this frothiness or this speculative thing going on. I mean, look at stocks like Tesla, right? When I looked at it earlier, it was, look at this. I mean, that's ridiculous. It's just vertical. This is froth, right? These type of movements are not sustainable. It looks great 2 weeks, like, oh, yeah. Remember, these were holidays back here. Like, oh yeah, Tesla just goes up forever. I'm just going to buy some. It can't go wrong. Well, when it pulls back, oh, I can't believe Tesla pulled back. Right? So am I bearish on Tesla? No, I'd like to buy some too, but not at these levels. Okay, so just to kind of give you an idea, don't get carried away with the froth and all the excitement and all the other nonsense that you're going to see when markets are pushing highs. That is how I think as a contrarian. But as you can see, I'm not calling for shorts in something like Tesla, right? I wouldn't do something like that. But taking a long call UVXY position is, for me, a more conservative way to bet on a pullback over the next quarter, which is 3 months I have, right? That's why I would consider March calls, not weekly. I wouldn't buy calls out next week. You're just throwing money out the window, right? Because these things, the market can grind for as long as it wants to, and then when the pullback begins, it comes out of nowhere, right? So you're trying to play that game. You're dealing with randomness, it's like musical chairs, like I keep saying. Okay, so that's the stock market. Now, before I get to your questions, and I'm going to get to your questions here in a moment, I want to point out gold. Look at gold. Now, we had a question in the free chat room about this. Hey, what's up with gold? Why is gold doing this? Well, I don't know the real answer. I suspect, and I saw some stuff about how gold is being compared to Bitcoin, and that Bitcoin's a much better investment than gold for a number of reasons, and blah, blah, blah. This may have something to do with stuff that's going on in Europe. Whatever it is, it doesn't matter to me why, okay? What matters to me are the levels. Now, is gold fundamentally changing? Is the U.S. government raising interest rates? I mean, not yet. I haven't seen them raise anything yet. Maybe this has something to do with NFP earlier today. I don't know, because I didn't see the outcome of NFP. But the point is this: fundamentally, not a lot has changed for gold. Gold still, there's still a limited supply of it. The U.S. is still talking stimulus and mailing checks to everyone or whatever. So gold is still going to have that bullish pressure, right? So even though we have this irrational sell-off, and by the way, Bitcoin will do this too at some point for no reason. That's how I like to think of it. No reason. This is randomness. Now, the other thing I want to point out about gold is this move that you're looking at from basically where it is now, going all the way back to the August peak over here. This is the CFD, by the way, at 2075 was the high. That move from that high to the low, the 1764 low in November, all of that is a wave 4, like I was talking about with Bitcoin earlier. That's what a wave 4 looks like. Very typical wave 4. It consolidates. It's very hard to trade. A lot of false starts, a lot of fake outs, right? And that's what you can see before it breaks out. I believe Bitcoin will do something similar, at some point during the year once the buyers stop buying, right? And we go into a wave 4, because you're going to have everyone's going to be trying to buy that bottom and blah, 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 and this and that. People are going to get caught. This is a wave 4. Very hard to trade, okay? Now, here's where we are now, right? We pulled back to this 1840 level. That's an important level. And as you can see, buying has begun, right? There's a little tail on that candle, on that large bearish candle. So what's this thing at now? 1848? Okay, cool. This thing was as low as 1828 today. That's a huge move for gold. Okay, gold, it's minus 65 points right now. It was minus more than that. So people were asking, is this a good place to buy gold? This is a great place to add to your gold miners, okay? We have a portfolio, we have positions in gold miners like Wheaton Precious Metals. Look, pullback. NEM, take a look, right? Pullback. The gold stocks aren't getting beaten. They're not getting beaten up that much. CMCL, another one, right? Pullback. So even though there's no buy signal in these things, and this is what I mentioned in the chat room, there's no buy signal. This is an opportunity to add into something that's generally strong, that's showing weakness at the moment. I don't think gold is going into a bearish trend anytime soon, even though it's shaking people out, okay? So how much do you add? Well, it's all dependent on your portfolio allocation model. So you should know, like, oh, okay, well, I have a target investment of, Wheaton Precious Metals. I'm only going to buy 100 shares worth over time. That's what I'm interested in. I've accumulated, 40 shares. So in this move here, I'll buy 10 more shares, right? And you're accumulating as you go. You don't throw all the money in one, purchase. We talk about that all the time, in the chat room and stuff. And Andrew pretty much takes care of the portfolio stuff. But anyway, that's the idea. So you don't have to buy the CFD outright. Although if you want to step in front of this, there's no stability here. So you have to think of it in two ways, right? So I was describing the stocks. That's the portfolio perspective. That's inventory. Great time to buy some gold miners, right? Again, you buy some shares, gold goes lower, you be prepared to buy some more shares, but you're not going to overload to where you get caught. And just in case gold pushes that low, because you have to be open mind, you have to have an open mind to it. It can happen, although it's not likely, but it can happen. And if it happens, you need to be prepared. And the way to do that is to be sized properly so that you don't take too much pain. If you take too much pain, you're likely to bang it out or get margined out, right? You become a weak hand. There'll be plenty of opportunities to buy more of these. And when gold eventually gets its way back to 2K, your investment will pay off, right? So that's an investment perspective. As a swing trader, there's no setup here. This thing is still not stable, right? So I'd want to see at least a bullish pin bar develop or something over the next couple of days. Perhaps some stability. Would be nice to see a couple of candles develop. So we'll see. You know, today's Friday. We'll see how this thing is by Tuesday. Perhaps we could send out a swing trade on the CFD itself. But this thing is tough to trade. So the alternative, like I said, gold stocks, GOLD, NEM, WPM. There's a whole bunch of them. Okay. So anyway, let me know if you have any questions about that. I just wanted to point that out. And that's that. All right. Let me see how I'm doing with time, and then we'll go into your questions because I think I pretty much covered, 40 minutes. Man, I talk a lot. All right. So I want to get to your questions now. Covered all the main markets that I want to talk about. I do have a couple of stocks I want to show, but let me get to your questions first. By the way, if you're new to Greenbridge Investing, please press the like button so that you let me know if you like what I'm doing. Plus, register for the YouTube channel here so you get an email notification every time I do one of these and the Talking Market Show, which is every Tuesday. Come to our website, greenbridgeinvesting.com. We have swing trade signal service by text, by email, portfolio management ideas by email, and a chat room. We also have a free chat room. We have a 7-day free trial. Stop by, check it out, say hello, ask us some questions. All right, let's go through the chat. Okay, so DJ wanted to talk about BYND. Let's take a look. That's Beyond Meat. BYND, Beyond Meat. And we've been watching this one because when this thing moves, it's a mover, right? And what does he say here? Long. Okay, so Beyond Meat is pulling into the support area. It's actually slightly below the support. Here's the support right there. Basically, it's 120, okay? You can round it a little bit. 120 is the whole number. So it's fooling around there right now. I don't like to see that it started out with a bullish pin bar and now it's giving it back. I don't like to see that usually. But here's the thing. DJ, I know he's not here, but he'll be watching this after the fact. I don't know where your stop is or what type of trade it is for you, but you have a couple of levels to consider as far as using a stop if it's a swing trade. First thing I'd be looking at is this extreme point right here, which is that 113 or 112 area. So if price goes there and shows no signs of turning around, there's no bullish pin bar, there's nothing, okay? It's just a big bearish red candle. That's probably a good time to reduce your risk, maybe take the loss, reduce your size, whatever it is, and then see where the next level develops, which could probably be in those low 100s, okay? But it's very possible that you get a double bottom in that area or a failed low. So you have to watch for that as well. You do have the lower high in place here at this 144 level. That's a lower high, which typically can lead to a lower low. But this thing is not exactly in a bearish trend, right? When we zoom out a bit here, this thing is in a consolidation, right? And some people may argue, oh no, but the trend is bearish. You have lower highs here. Right, but we haven't taken out any major supports just yet. It's trying to, but it hasn't done it. Okay, so I would be looking for the reversal or the failed low. If you're long, I would just hold on at this point until one of those levels are broken. If you're not long, like I said, I would wait for that reversal to do something with this and then define your risk from that point. But I would still be bullish on this at this point, okay, until those supports are cleared. All right, so that's BYND, Beyond Meat. Let's see what else. Hey, Mario. Yep, okay. Okay, Javier. All right, so Mario, Javier. All right, cool. So HS, okay. Hey, Michelle. Michelle, ETH. Wait for retrace, 1K. Okay, so Michelle wants to know about Ethereum. Let's take a look. Let's see. Can I look at here? So hold on. Here is Ethereum, And her question is, wait for the retrace to 1,000. Now, so Michelle, if you're talking about a swing trade, right, here's 1,000. I mean, it's crazy that it made it as far as it has, right? What's the high here? 1291. No one ever thought that it'd make it that far again. But again, this is, people overdo it, a lot of hype, you know, and it's the herd mentality. So it's a good question. Now, as far as a swing trade, 1,000 is a psychological inflection point. Now let's look back. Let's go back in time and see what was going on at that level in 2018, because that will have some, that can give us some bearing. So yeah, see, there was a resistance there, actually just around there, slightly above there, but in those high 900s or whatever, there was an inflection point. So what, 1,000 is a good point to anticipate. But here's the thing, you need structure there. If you're looking for a swing trade, you need structure, right? And also I'd want to see a lead from Bitcoin, because again, Ethereum is still not on its own. I know everyone wants to think it's on its own, but it's not. Okay, Ethereum would not be here if Bitcoin wasn't at, you know, 40,000. So I would want to see Bitcoin doing something similar. So that is a level to consider, Michelle. If 1,000 is cleared, then I would look at some of this recent price action. And here's the thing, and same goes for Bitcoin. The nearest support on this thing is like 700, okay? That's based on the price action that we're seeing, this historical price action that we're seeing right now. So if 1,000 is cleared and this thing wants to go into a wide range, like a wave 4 type situation, that low, the low of that range may be in those 700s. It's just something to keep in mind. Gives you a point of reference to measure your risk from. I do not like this outside bar, or this large, it's not an outside bar just yet, but this large bearish pin bar, I do not like that, okay? As far as, you know, looking at as a buying opportunity or anything like that, this thing is due to pull back. So those are levels I would consider. Okay, so good question, Michelle. Thank you for asking. So yeah, I would definitely wait. She says, buy for the long period. So Michelle, if you're talking about an investment or inventory, then actually I would probably wait till that 700 area or the break of 1,000, because here's the thing, you may get an initial push off the 1,000 and it may push lower. Now, one thing you can do in that situation, if you really like Ethereum, right, obviously you want to invest in it, well, then you look at how much you want to invest. So let's just say, for argument's sake, you want to invest $1,000, okay? Well, you're not going to invest all $1,000 at that price, at 1,000. Perhaps you can invest $100 worth at the 1,000 price point, and if it pulls back more, you have 9 more investments to make. Okay, so as it pulls back and starts to find supports and hesitates and pops up a bit, you can put your money to work $100 at a time, and that will help you average into a price. Now, like we always talk about, you don't have to do that as a reaction to the market. You could do that based on a time schedule. So you could say, okay, on the 15th of the month, I'm going to make a purchase, and on the 1st of February, I'm going to make a purchase, no matter where it's at. But if it's lower, you could make a larger purchase. If it's higher, you make a smaller purchase, right? And that's how you control your risk. So if it's lower, maybe you buy $150 worth. If it's higher, maybe you only buy $50. So if it pulls back, you're like, oh, who cares? You're still accumulating your position, right? And that will put you in a nice average price. So if Ethereum has a very big move to, like, 1,500 or 2,000, you will have a nice average price. Just like we averaged into Bitcoin around that 6,000 or 7,000 level. We were buying it from 13K all the way to 3K. And people laughed at us. There were plenty of people that laughed at us when we were doing that and said that we had no idea what we were doing. Well, Bitcoin's at 40K now. So, yeah. Anyway, all right, so I hope that answers your question. Hey, Gabriel, nice to see you. All right, HS, what do you think of EOS weekly? It looks like we are in an accumulation phase. What do you think? Okay, EOS, let's take a look. EOS, USDT. Now, you want to talk about a weekly. All right, let's see. This is not a very good chart, so let me see if I can find a better chart. EOS, USD. Okay, that's a better chart from Coinbase. Let me see what the weekly looks like. Hold on a second here. Can I put a weekly in there? All right. So here's the weekly chart of EOS. And HS's question is, what do you think? Well, all right, yes, it's definitely range bound, and it's in the middle of the range. I don't like these coins. When Bitcoin is as dramatic as it is, 40K, these like we've done, we compared Ethereum. Ethereum was doing its job. Same with Litecoin, doing their job, pushing highs, breaking resistances. This thing is not. Okay. Now again, so this is a gamble. I look at this as a penny stock now. It may go at some point if there's some news, maybe, but unless you're an insider, you know, and unless you have that news in advance, this is just, you know, you're just gambling in this thing right now because you don't know where that move will come from. Technically, there's nothing to do here, especially in the middle of the range. So if you want to play with these, like I said, you throw in a very small amount of money and see if you get that home run, or you know, you average into it. You have like a target amount. Let's say you want to invest $100, but you don't have to throw it in all at one price. Maybe you buy $10 at a time, right? As this thing goes lower, you're averaging in, you know, in your max risk $100, maybe $200, but that's it. Okay, and you accumulate the coins at a lower price basically over time. And if you get that spike that comes out of nowhere, because you can see there's a few of them on here, then that's your chance to get out. Okay, but if you're looking for home runs on these things, or you're looking for like solid, you know, consistent investments, I don't know. There's many better opportunities out there. I mean, you want to play this type of game, that home run type of game, options. There's so many of them. So many better ones. I'm betting on companies that have real products that do real things. Okay. So anyway, yeah, that's how I would handle EOS. So it's not horrible, but it's relatively, I don't like the relative picture compared to Bitcoin. Okay. And like I pointed out with theta, chart's not going to be enormously helpful in these situations because you're betting on news, or you need some news to come out of nowhere. All right, so I hope that answers your question. Right, so like you said, it may be an accumulation phase, but accumulation for what though? With Bitcoin at 40K, this thing should be beyond the accumulation phase. It's not like EOS is a new coin. It's been around for a while. So why would they be accumulating now? Anyway, all right, Scott. Hi guys. Thanks a ton for answering my question about what? I'm just reading your question here. Cover trades. I asked you about Viserion. Oh, and targets I look for after buying at 27.5. Okay. VRS. Is this one of those? Okay. I know some of these things have gone nuts. I was looking at some of these stocks. You noted 57 as a target area, but I am trading this on a weekly time frame. So it'd be great to have a professional opinion on this stock for a larger time frame. Okay. So let's see. Now, you want to see VRS on the weekly. Well, I mean, that's an interesting move that it's had over the previous month. Now, you're getting a pin bar over here, sort of, but it's not going to be, you know, it's very tough to play this in a technical way on a weekly time frame. You're near a high, I can tell you that. So what you have to look at are the lows, right? As far as making adjustments. If you're playing the bigger picture on something like this, you have to be prepared for pullbacks, and you have to be able to handle those pullbacks, because this thing can pull back, you know, halfway. It can go back to the 10s or 9s or something like that. It's very possible. So that can begin with a break of this low, right? 11, basically 11.5. You clear that, it's probably in pullback mode. So when you have that situation and you want to look at this more from an investment point of view rather than a swing trade point of view, well, a situation like that can prompt you to perhaps reduce exposure, meaning you're going to hold on to some, but you're going to unload some because maybe you have it from a real good price. So you're just going to reduce risk and lock in some more profit. And then when it finds its next support, perhaps you can add some back until it starts to show signs of strength again on that weekly time frame. But if anything on the weekly, you want to see weekly highs or lows taken out. Okay, it took out the previous week's high, and perhaps next week it'll stay strong. This recent momentum is bullish. I'd like to see how it does around the $13 area. Now 57. Do I have the right stock here? Oh, I'm sorry. Sorry. I'm looking at the wrong thing. Good thing I read the chat. I would have talked about this for 3 hours, Scott. Okay, hold on. VRS on the London exchange. See? That's why. Oh, there we go. Okay. different chart. Anyway, well, you got some educational stuff out of the other chart anyway. All right. So good thing I didn't talk about it for 3 hours. Now let's talk a look at this. So you got this thing from a good price. Now let's go to the weekly, right? You want to see, this is the weekly on VRS. So it's vertical right now. Okay. When it's vertical like this, there's nothing to do. You just let it ride. There's no reason to sell this thing. At least on the weekly there isn't. It took out that 57 level. And so I would be looking at next resistance levels. Okay. Let's see. You're at one right now, but so far there's nothing to do because there's no sell signal. You don't even have a red candle. You have one around, I'd say around this area right here. So 84 and a half area, 85, that's going to be a resistance, right? If you don't get any, if next week does not turn into any type of red candle, I mean, this is your next resistance, right? Around that 84 level. You may have some around this mid 70s because I see some price action over here, but it's not much. It's not a lot, right? You have some like right here, right in this area. So you may have some resistance there, but at this moment, I mean, let's take a look at a daily chart, right? At this moment, there's no reason to sell that. Okay, I mean, that's just vertical. So you just hold on and let it go. So a couple of ways you can handle this. You can just use a manual trailing stop. I talk about this all the time. Put it 2 bars behind, and at some point you're going to get knocked out, and you're not going to get the high when it does something like that. But you're giving the stock an opportunity to keep going and going and going and lock in more and more profit until that turn comes. Okay, that's one way you can do it. Another way is you can wait for a pin bar or some kind of bearish situation to develop. Perhaps an inside bar, you take out a daily low or something, and that will prompt you to reduce risk or unload the whole position if it's a shorter time frame trade. But those are the resistances I'd be looking for on something like this. And like I said, when something goes vertical like that, you just let it run. Okay, you let it run, and like I said, trailing is a nice way to go about it. But you know, what if today's high? What is that? 58 is today's high. So what if that turns out to be the recent peak, and tomorrow it gives back the whole move, and you put your stop at, like, let's see, your stop is at 48, and it takes out 48. You'd be like, oh man, I could have sold this thing 10 points higher. Well, that's a chance you take when you're trailing the stop. At the same time, if this thing doesn't pull back, this thing may run to 80 and you'll still be in it as you keep trailing that stop. So that's the drawback. Like that's the trade-off that you have to consider. Okay, so great. Thanks for bringing that up. Great question. Hey, Pepe, can you talk a little about how lower and higher time frames? Okay. For example, I think maybe lower time frames contain clues to the higher time frames. That's a good question, Pepe. So let me see what I could use for an example on that. Well, we could probably look at Bitcoin, because Bitcoin's a good example. Oh, look at that. So, wow, minus 700 points. This thing's at 38.7. Boy, things move fast. So, all right, higher time frames, here's one way to think about them. They require more volume to develop, right? So they're always going to carry more weight. Now, you can get clues on smaller time frames. So this is a 24-hour or daily chart, right, on Bitcoin. So we're looking at a 24-hour period. Now, we can take a look at a 4-hour period, right, which is 240 minutes. And you can see some different price action in there. You say, oh, look, there are clues, right? Right, sure. The clues they're shaping the bigger picture. But it takes a certain amount of these clues, a certain amount of this price action to make that bigger picture stick, right? And that's really all a function of volume. So it's not so here's the thing. When you're considering trades, to keep this as simple as possible, certain time frames are more appropriate for certain types of strategies, right? So if you're interested in day trades or very small time frame strategies, you'll be looking at like 30-minute charts, 1-hour charts, perhaps 2-hour charts, right? 15-minute charts, right? That would be for intraday, and you're going to base all your information, your stops, your targets, everything on that magnitude, okay? But a swing trade doesn't consider all that. You know why? Because those time frames are irrelevant to a larger time frame, because it takes a lot of time for those time frames to come together to develop into something that's meaningful on this time frame. And this time frame carries all that weight. The problem with smaller time frames is they are more random. And it's very easy. The information that occurs on them is a lot less reliable if you're trying to take a bigger picture trade. So you have to put everything into perspective. So for swing trades, for example, we usually will not go lower than an 8-hour chart. If we really want to find something and look for a way to refine the trade, yeah, we'll look at an 8-hour chart possibly. But that's as low as we'll go. Okay, 8 hours is basically 1/3 of a day anyway. So a lot of the stuff that occurs in those 8 hours is meaningful as a function of volume. But it takes a while for a pattern to develop on a daily chart. It requires a lot of volume, a lot of decisive volume to do particular things, right? And those particular things are a result of an aggregate human emotion, right? So when a lot of people are selling in a particular way, it will show up a certain way on this time frame, and it's less likely to fake out on a larger time frame because of the magnitude of volume that's required. So I hope that kind of gives you an idea. So, but just again, to kind of, I may have said a lot of stuff that may sound complex and confusing. To simplify it, just think, day trades, you're looking at 30 minutes, 1 hour, and that's about it, right? Or anything less than that. For swing trades, you're looking at 8 hour and above. For position trades, you're looking at daily, possibly weekly, right? And that's it. That'll simplify the whole thing. You want to do everything in terms of those magnitudes. That means determine your risk, measure your rewards, and make adjustments based on patterns that develop on the appropriate time frame. Okay? It took me a long time to figure that out, by the way. I should charge you a lot of money for that information. All right, anyway, I hope that helps. Let me see, Pepe. So spotting an emerging trend on a lower time frame could be helpful for, well, no, not really. Okay, so to answer your second question, there are a lot, like I said, there are a lot of fake outs. So like, look, we can go to a 30-minute chart on Bitcoin. Okay, and now we can say, oh, well, let's take a look here. Oh, so I see this bullish trend developing here on this 30-minute chart, right? And this really is not going to help you at all in terms of the magnitude of the pullback that may be developing now, which, as you can see, it's starting to develop here. So we don't know if this pullback is going to lead to a really big dramatic pullback, or if this smaller time frame trend will continue, right? That's where it can be very misleading, because this information doesn't carry any weight on a larger time frame. It looks like it after the fact until you get a big dramatic move the wrong way, which seems to come out of nowhere. That's the problem with the small time frame, right? The move will come out of nowhere and it won't make sense on the smaller time frame. And then you look at the daily chart and like, oh, there was a resistance level up there. I didn't see that. Okay, so that's the best way for me to explain that. It's a very tough topic, and it could be very confusing. So I hope I gave you some clarity there. Let me know if you have any follow-up questions on that. Okay, so let me see here. DJ, it's very extreme to tell people not to buy at high. They called me names. From now on, I am not talking to anyone about charts and stuff. Well, DJ, you're going against the herd. Okay, why do you think what you just described there is the same reason why I'm so unpopular on TradingView? Because I talk about the truth, and I talk about what the market is actually saying, not what people want to hear. Now, there are many fake gurus out there. They do the right thing in terms of marketing. They tell people what they want to hear. Okay, and I don't do that, because when I was in that position, I didn't like to be told what I wanted to hear. I wanted to know the reality, so that I could make more reasonable decisions based on market realities, right? What's actually being reflected in the price action, not stuff to appeal to my emotional state. So, that's why I'm a bad marketer and no one likes me, because I'm too realistic. People like to call me pessimistic and all other stuff. You're raining on their parade, DJ. They just want to hear that Bitcoin's going to keep going up and up and up, and they just keep making money. But they disregard the risk. And I've been in this long enough to know what happens when you disregard the risk. And I've lost enough money to know. All right. And so as the what's the word I'm looking for? For our members, I have a duty, or I have to look out for our members, right? And that's why for our members, I tell you my perspective, and then it's up to you to utilize that or not. But I will not appeal to your emotions, right? So if if you're in a good mood and I ruin it for you because I'm telling you that Bitcoin is very risky and it keeps going higher and your friends are making money and you're not, well, when it turns and your friends are not making money anymore, you'll be happy that you weren't caught in the turn. And now you'll be looking for a buying opportunity like I will be, okay, off of your friends. Anyway, so, okay, Scott, that's the wrong, okay, got you, Scott, got you. VRS, got you, okay? DJ, I know, I was talking to a group of guys, exact mentality. Look, DJ, someone that I know told me about a friend or a few friends that were buying stocks on Instinct. And I said, Instinct? No charts, no, whatever, just, hey, I buy Apple because I buy Apple products and it's going up. So I'm just going to buy it and they're making money. I said, okay, well, that's the herd, right? That's what the herd does. They react to stuff. They watch the news. It sounds good. It enters into their logical mind. And these are not dumb people, by the way. Okay, they're highly intelligent people. But markets have nothing to do with intelligence. They're irrational. And irrational is a function of human emotion being irrational. So here, let me pull up a different chart here while I'm ranting. Let's just put the SPX here while I'm ranting. So that's what when people are irrational, they want things to appeal to their emotions. They will only look for information that appeals to their emotions, just like we do. So those same people are going to be the ones that provide our opportunities when the market turns, okay? Because they're going to be getting out while we're looking to get in. And when we look to get out, we distribute risk onto them when they think everything is fine, when things look their greatest. That's when the herd reacts. That's how it works. This is nothing new. It's been going on ever since there has been a semblance of a market. Okay, go back 1,000 years. Okay, so let me see here. Aziz, would you look at XAU? How is gold going to react if the dollar gets stronger? All right, good question. So, and gold is a perfect example of irrationality, because now there's two frames of thought here. You have logic, which is what we all resort to because that's what we do, right? We're human and we require logic. If this, then that. The news tells us this, then we expect that because that's how the world works, right? That's how we're brought up to think. But markets are random. There's no place for logic in a random environment, okay? They're random. They're highly random, but not always random. So Aziz has a question about gold. Well, if the dollar strengthens, gold technically should go lower, right? It should put more pressure on gold. Now, gold is in an ugly spot right now, but it's in an attractive, the momentum is ugly, it's bearish, right? And Bitcoin will look like this too soon. It looks ugly, but it's in an attractive location. This is where people are hating gold for whatever reason. It's irrational, but this is where I like gold. I'm interested in gold because someone's banging it out. Someone got caught up in gold over here. They believe all the conspiracy theory websites. Gold is going to 3,000. Blah, 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 and gold is right back to 1850. Okay, so this is where I become interested. Now, there's the long-term and short-term mentality next. Short-term, there's no structure yet, right? So buying here is very risky, although I like the location. It doesn't make sense to buy right now because the momentum is still bearish. It may go lower. It's possible. So if the dollar strengthens, then that follows that frame of thought. Gold is likely to go lower based on this momentum. But gold is in an attractive location. So if I see structure develop and I see confirmation as a short-term trader, I will be all about buying gold for a swing trade. Now, longer term, you have to look at this as a buying opportunity when it comes to mining stocks. So now let's take a look at the dollar real quick, right? Because this perhaps could be a reaction to a strengthening dollar. I just put the wrong symbol in. So here's the US dollar. And look, wow, the US dollar is popping a bit there, right? Most likely that is a result of NFP. I don't know the exact outcome of NFP because I didn't look at it yet because I rarely follow news. I just look at market reactions and that tells me enough. So, but I can see here that there's a bounce attempt in gold, in the dollar, in the US dollar. So the euro got hammered too in this, by the way, which makes sense. You have a failed low situation on the US dollar index. So that is a buying setup, right? That's a reversal, and it's coming off of a pretty significant level, right? Now the question is, how far can this move go? The dollar has been in a bearish trend. There's no question. So it doesn't mean we're going to get these little buying attempts, right, during the bearish trend. So what I want to spot in the dollar, which can help me with gold, are the resistance points that the dollar should not break if it's going to remain in a bearish trend. And these are your points. So 90 and a half basically is 1 point. The dollar needs to stay below that. If it can, then it's likely range bound inside within a bearish trend, which I'd be anticipating a break of that, a lower break of that trend at some point, which should be bullish for gold. If 90 and a half is cleared, you're looking at like that 92 area, okay, which would be a pretty dramatic move for the dollar. But I would be looking at that as a potential resistance and reversal point if this dollar is going to stay in a bearish trend. Now, the question is, you know, if the dollar gets stronger, right? So those would be examples of the dollar getting stronger, but not necessarily changing its trend. If the dollar, now breaking resistances is something that the dollar should not do if it's going to stay bearish. If the dollar clears 92 and a half or whatever this level is here, that could be a change of trend developing. Okay, so I'm not going to worry about that until it proves itself. And of course, when it comes to the dollar, fundamentals are going to have to play a role, meaning the Federal Reserve is going to have to change their tune. There has to be some other dollar bullish events fundamentally for me to believe something like that. Otherwise, I'm just going to write it off as irrational, you know, just overreactive, blah, blah, blah. Okay, and I would expect the bearish trend to resume, and I'll be looking for signs of that. And I'll be looking to adjust to gold accordingly. At this point, you know, with this pop in the dollar, gold mining, right? I would buy shares. Again, you don't buy tons, but gold mining, WPM, okay, wheat and precious metals. Like I said before, buy a few shares, right? Andrew was talking about this. He put on an ad. You allocate how much you're going to invest in this thing. It's a $40 stock, so that means it's going to be $4,200 per 100 shares, right? If you only want to invest $4,200 worth, you don't do it all at this price. Buy 5 or 10 shares here. If it pulls back further and further, you can average into the position until gold changes its trend, and that can come from the dollar. So that's how I would treat that right now. I hope that answers your question. I talk a lot, okay? It's over an hour, and DJ hasn't stopped me. So, okay, hope that answers your question. Let me see what else we have here. Scott, I read your comment about WSB though, okay? Pow, hi, I know you don't like slow movers, but you can take a look at PFE. I'm liking this area. Hey, you know what? Nothing wrong with a slow mover. I'm not a big fan only because, you know, I like to see things move, but hey, everyone's different. That's cool. So Pfizer, we know what they make. And let's take a look. First thing I want to look at is general trend. Has been generally bullish. I see higher highs and higher lows, at least going back to March. Okay. It's been wide ranging though. You do have a support here at $36. It's fooling around there a bit. All right. So if you're into this as like a swing trade type of situation, or if you're looking for that, I'm not opposed to it. If it clears the support, meaning you take out that 37 and a quarter, right? You start taking that out, and this area that it's in right now establishes itself as a lower high, then I would either take the loss or just stop, you know, putting on more and let this thing stabilize more. I mean, you do have a couple of supports in this thing. Like, look, you have this October November low of 33 and a half. That's not that far away, you know, $3. So you have that whole area for it to find stability. If it breaks that October low or November low, yeah, it's October. If it takes that out, I would just hold off. Wait for this thing to show better structure. But at this point, you know, it's a kind of a tough spot because it can go both ways here. But you are at a support. It's an old resistance, new support, so it's worth taking a chance. Just depends on how you want to manage that in terms of being a swing trade or a position trade. Okay, so I like it. I mean, it has potential. Look, its recent high was what, 40, 42? So even if you make it halfway there to 40, right, you risk $2 to try to make 2 or 3. That's worthwhile as a swing trade. Okay. Again, for those that may not know the difference, understand the difference between a swing trade and a position trade. All right, or inventory. If you don't know the difference, learn the difference. Okay. I know. Pow knows the difference. Okay, Scott. Think I deleted it so I could see that the stock was on. Oh, okay. Got you, Scott. Yeah, sorry. Again, that's why I check these chats. Sometimes I'll rant for 3 hours about the wrong symbol. All right, DJ. Oh, people love looking at 1 minute to 1 hour charts. They hate 1 day charts. They love news. DJ, that's human nature. Okay. Like I said, in my trading view articles, I get nowhere near as much as some of these other people as far as views go and stuff. It's because I don't talk about what people want to hear. So I'm a horrible marketer. What am I going to do? But people like good stories, right? That's what news are basically good stories because they appeal to our logic. Now remember, as humans, we like to think that we are more in control than we are. We also like to overestimate our abilities. So we hear some news, it goes into our logical brain, and we're like, oh, I know what that means, and I know what I'm doing. So it makes sense, right? Meanwhile, you don't understand the abstract randomness that you face. That's, so being a short-term trader, you really need to understand the randomness of the market and understand how people behave in random environments. That's where the herd mentality comes in. And understanding emotions, right? Because markets unfold in patterns that are linked to emotions. And that's where technical analysis helps us. Okay? But you have to understand how to interpret that and how to pull that from a chart. You're not going to get that from an oscillator. All right, let me see what else I have here in terms of questions. Great questions, everyone, by the way. All right, let's see. Aziz, NLS. Yes, that's right, Aziz. Thanks for bringing that up because I forgot. NLS. So Nautilus. This was a recent mention. I know we talked about this recently. Someone talked about this. All right, strong stock, clearly. All right, you have the failed low over here in this situation. What is that? $17.40 around there. Nice failed low over here. You have the higher low that developed here. Now, since then, this thing the broader trend has not reasserted itself just yet. Okay, it's in this range. So what do you do here? Well, if you have some, there's really nothing to do here. Your risk right now is defined by, you have one low over here in this area, the 17.25 basically. If that's cleared, you're looking at 16.5, which is the failed low area. If it takes that out, that's not good. Okay, if it takes it out decisively, that's when you need to make an adjustment, whether it's taking a loss, reducing your size, or doing something. All right, because that would be proof that it's pushing the low. But it needs to close decisively lower. It can't just touch it and then turn around and fake you out. You know what I mean? So at this point, that would be the adverse scenario. As far as if you're not in it and you'd like to buy some, well, I wouldn't do it here. Okay, see if it can retest the 1750 area, something like that, and see if it could give you a reversal there, something along those lines. That's a more conservative scenario. The more aggressive would be the breakout. Now it tried to break out here, as you can see, but it failed, right? And that happens. That's a failed high. But if it can clear that 21.5, if it can clear it and you buy some and it goes, well, theoretically, it should go for the higher high, over the next few weeks, right? Because why? Well, this consolidation is just one gigantic higher low formation in a broad bullish trend. So at some point, it's likely to break out and test those highs. So I like it as a long, generally, because the trend hasn't changed yet, just not at this current price. So you have to figure out how you want to manage it from there. I'm trying to give you different scenarios so that you can consider this from a investment perspective as well as a swing trade perspective, which again, they're not the same. Okay, so I hope that answers your question there, Aziz. Okay, let me see where I hear. I'm going through the chat. Okay, no problem. Okay, how about Baba? I bought 266. Okay, what should be correct action? Okay, let's take a look. Baba. So this is Alibaba. They got hammered, I believe, with the news of delisting Chinese stocks or something. I think that's what caused the catalyst. I don't know because I don't pay much attention. But here's the thing. All right, so you're in the position. Let's talk about trend and levels, right? It's the first thing we want to take a look at. The trend is generally bullish, right? Going from that March low. Now, recent price action, not exactly bullish, right? That's a corrective move. We have a lower high here at 279. Now, you do have something in your favor. So it found its low at, what is this? Basically that 210 area. And you are in from 266. Ooh, where is that? 266 is the middle of the range. All right, well, that's not horrible, okay? you're in the middle of the range. A common mistake with something like this, again, is maybe perhaps you got too big. I don't know. But this is why, again, when you're looking at long-term stuff, you want to control risk with your size. But anyway, all right, so it gapped on you, and now you're caught in this thing. But here's the thing. You have a higher low that's developed yesterday. It was established yesterday, right, off of that pin bar candle that you have. And today, nice close. So with that, that's a reversal, okay? That's a reversal off of a level. Let's take a look at the level here. An old resistance back here around the mid, like 215 area, something like that. 216, 215, whatever. 218 even. What is that price? Yeah, 218. So around that 220 area, okay? That was an old resistance from way back, April, May, June. And you have a higher low developing there. That's a good sign, okay? So if you're in this position at this point, I would give it a chance now to recover. Likely it'll try to fill this gap around that 245 area, 240 area. If you've accumulated too much and you're uncomfortable, as it pushes higher, it will give you a chance to reduce risk. You may be taking a small loss, but what you have to do is see how the price action behaves in this area up to this old support around that 250, 260 area, right? That was an old support, which is likely to act as a new resistance now as a retest. So that will give you an opportunity to reduce your exposure. Again, you may be taking a small loss on some of that, but you know what? It's better than a larger loss. And perhaps you'll have the opportunity to hold on to some and watch that go into profit so you can manage your risk better that way. All right, but as far as right now, this is a good sign. Okay, now the opposite scenario, the adverse scenario would be it fails right away, takes out this higher low at that 220 area and takes out the low. Okay, basically 210 low. It takes that out, it's probably going to make the lower low. So that's a risk you're facing. At this point, as this thing starts to push, I mean, you have to decide how you want to manage that risk. You know, perhaps you could just unload small shares as it pushes higher, and if it turns on you, at least your exposure has been reduced. But I wouldn't completely get out at this point unless it does something really adverse, like take out this 215 low or 216 low or 220 low, whatever that is, okay? I hope that helps there, but not a bad situation. I mean, like if I was looking for longs and you asked me, is this a long? I would say that's a long because it's a reversal off of a support. All right, so at least give it a chance to give you an adverse signal. That's what I'd say there. But again, you know, this is for educational purposes only. You know, if you lose all your money, please don't blame me. Okay, Pow, time to give ZM another. Okay, let's see here. So this was a swing trade, that a trade of the week that we sent out, what, about a month ago or something. This one didn't work out very well. Some of them work out really well. Not all of them do though, right? I believe this one went to the stop. Where the stop was at 370. Yeah, this thing's at 349. Yeah, look, this thing right now, it's in a failed low area here. So it's in a failed low zone right here. DJ, I'm talking too much. It's in a failed low. This is, look, you can define your risk here. I do like that. So 336 is your low around there, 340. Yeah, so around that 335 area. If you buy this right now at 349, I mean, you're looking at least 15 points of risk. At least 15 points of risk, okay? If this thing can break this recent high of 352, that little minor high, if it could take that out, it's probably going to see that short squeeze, right? And that can take you up into the middle of this range. That would be a really nice swing trade if it can produce that. That's 418. That's all within reason. So yeah, I would agree, pal. This is definitely a high potential and relatively low risk. If it holds, if it breaks that support, just step aside. They take the loss and just forget about this thing. But if it does not break that support, you have a lot of potential here. So I agree. I like that. I like that. That may be today's Friday. I was gonna say that might be a good trade of the week. But if it starts making its move on Monday, then we're gonna have to call something else. But I like it. I've been in Nautilus. Andrew talks about it too. Way undervalued. Okay. Pow, I think NLS is another wave 4. Yeah, it could be. And again, remember, if it's a wave 4, what comes after wave 4 is wave 5, which should be the push to the new high. Scott, okay. Yeah. Okay. Sure. Yeah, I know I'm talking too much, Scott, I know. But you know, it's Friday, you know, and most of you are members. So I don't mind putting in the extra time. What is your thoughts on buying a gold producer ETF? Okay, so GDX comes to mind. GDX. Okay. Again, so this is not a bad idea in the face of ugly gold. And look, these aren't getting beat up that much. So yeah, today's candle is ugly, and it may go a little bit lower. Look, the low on this thing, the recent low, the December low, which I'm willing to bet coincides with gold at 1764, which is at 33, 36. I mean, this thing right now is at 36. So you're looking at, possibly a couple more dollars of pain in there. But hey, you're not buying the high, and you're buying something that should stabilize. So I wouldn't mind putting some shares aside on something like a GDX or, a quality ETF, betting on a longer term gold move higher. But again, if gold starts breaking major levels, now we're bullish on gold right now, it's pulling back, it hasn't broken any major supports yet. If it does, then you need to stop buying these things, okay? Like you can average into it to a point. Let's say for example, you have $1,000. You want to invest $1,000 into GDX. You're not going to buy it all at the same price. You're not going to buy it all at $36.52. You buy $100 now, it goes lower, you buy another $100, it goes lower, you buy another $100. You still have $700 to go, right, of investment. Breaks the support, you stop buying. Okay, or maybe you buy one more 100, right? So now you're $400 in. You have $600 that you have not invested yet, breaks the low. You stop investing. Okay, you wait until this thing stabilizes before you continue. That will protect you in case this thing really gets hammered, right? For some unusual reason, if gold goes to 1200 or something, which again, it's not very likely, but it can happen. Well, you won't continue to be buying more and more and more and building a position that's going to keep going more and more against you. Okay, you stop, and then if it stabilizes, then you continue with your allocation plan. All right, that's a way to protect yourself. So I hope that helps. So yeah, I would say, GDX, that's the one we follow pretty much. Okay, POW. I regularly use GLD for gold. Highly liquid and good ETF. Okay, so GLD is another one. All right, POW. Nice thing about Zoom, negative correlation to SPY. Yeah, that's a good point, which I like, the market high, because theoretically shouldn't get beat up. That's right. So POW brings up an interesting point about Zoom. It's not a high correlated stock. It's not a market stock, which means it is more likely to do its own thing. What other kind of stocks do we see do that? Pharmaceuticals, okay? Even electric vehicle stocks. Here's one that I've been eyeing recently, right? Look at this one, Lordstown Motors. I think people have talked about this before, but I just found it, and I was like, okay. So I like things that do their own thing, that have their own potential. Pot stocks. CGC, look at this ridiculous stock, right? I wouldn't touch this thing right now, but it's doing its own thing. INO, this is a pharma stock. Oh, this is in a nice position. Look at that, hasn't gone anywhere yet. But again, when it goes, right? It could be triggered on news, whatever it is. But those are stocks that are not as correlated. So those are great for short-term oriented. I like them for swing trades. When it comes to long-term investment types, I prefer market stocks, things that do follow the S&P and all that, because then I can time them better and follow the S&P as my guide. Okay, so good questions. Let's see. Should take account that Zoom is, okay. That's possible. But again, now you're applying logic, right? So that's possible. But, logic aside, if it's not a highly correlated stock, for whatever reason, some other news can come out, whatever, and logic aside, this thing may, even if it tests the middle of the range, it doesn't have to go to new highs for me to make money. I'd be happy if it could just pop up, $20 or $30. It's a huge move for this thing, right? And then that's it. It's a short-term swing trade. So just something to keep in mind there. POW, remote working isn't going away. My employer, for example, has talked about, okay, right, and that's possible. So again, that's where logic can get in the way of things, right? And you may say, oh, but based on this, if this, then that. But as a short-term trader, I'm only interested in patterns and probabilities. So although that logic may play out, some other piece of information may come along that may spike Zoom. What if for some strange reason no one saw this coming? What if, like, Google says we're buying Zoom. I mean, that's just a random example. But what if they came out and said that? Zoom will go to 1,000, right? Or whatever. So that's what you have to realize. You can't apply logic to these situations because stuff can come out of nowhere. And we're not as in control as we like to think we are. All right, so I think I answered everyone's questions. Boy, I'm talked out. How much talking? DJ didn't stop me. I always tell him, stop me at like, an hour and a half. It's been way longer than, it's about an hour and a half. Okay. So, all right, everyone, if I've answered your questions, yeah, I think I'm going to wrap this up now. So let me just finish with this. Again, Bitcoin, there's a lot of hype out there. There's a lot of nonsense. There are a lot of YouTube videos touting Bitcoin. As DJ said, people are getting mad at him for telling them not to buy the highs. It's the herd mentality. It's froth. If you want to be effective in the markets, especially over the short term, it really helps to think like a contrarian. That doesn't mean you have to take action. It doesn't mean you have to be shorting everything, right? That's not what a contrarian does, but you think ahead of the herd, okay? And that's what I really work very hard to do, is try to anticipate the next move, whether I'm trying to take a position based on that or not. So something like Bitcoin, again, it's at a resistance. I'm anticipating selling activity. We'll see if we get that selling activity over the next few days or not. I would like to take a long position, but not at these levels. I want to see a support, I want to see a setup, and I want to see confirmation. I follow the rules. The rules are there for one reason, and that is to minimize my human nature, to take me out of the equation as much as possible, because I know human nature does not work very well in random environments. We can sit here and think we're as smart as we want to be, we're as logical as we want to be, or I'm good at my job and I'm a doctor, so, the market can't be that hard to figure out. It's all emotional. That's why you see some very smart people make some very dumb mistakes, because this is a function of emotion. Okay? So that's what I'm looking for over the next few days, and something like Bitcoin. Things like Ethereum and Litecoin and all that will likely follow this thing because they don't trade on their own just yet. So I'll leave you with that. If you're new to Greenbridge, please come by, say hello. We have a free chat. We have a free chat room. Quite a number of people ask questions in there, and sometimes we don't answer them right away because we don't see it, but we'll get to it. So please just be patient. But come by, say hello. We also have a swing trade signal service by text, by email, portfolio management ideas by email and text too, and chat room, right? A premium chat room. Most of you are in it, so you know what goes on in there. We have a 7-day free trial. Stop by, give it a try, say hello, see what we're up to. We trade everything, right? Stocks. Forex has sucked. We haven't really had any Forex trades in a while. We had that euro that I put out like 4 weeks ago, but it's been very difficult. But plenty of stuff going on with Bitcoin and the altcoins, right? We've had some stuff and lots of stuff in the stock market, as you know. So check that out. Also, if you like my video, please press the like button, and also register for the YouTube channel here, so you get an email notification every time I do one of these, or when we stream Talking Markets. All right, everyone. So if I missed your question, I think I got everyone's questions, but if I missed your question by any chance, stop by the chat room, ask us there. All right, and we'll be sure to answer it. Thank you again, everyone. Enjoy the rest of your Friday, wherever you are in the world, and I'll see you next time. Thank you for watching.